David Shapiro here with the Shapiro Real Estate Group. It is March, and you know what that means. South by Southwest is here. But also, we have a market update for you. I'm here with my colleague Lee Abraham, our Senior Vice President, and Lee has a long history in real estate, graduated from college with a degree in real estate, has been an appraiser, owned an appraisal company, owned an inspection company, has been a realtor for over 30 years, so brings a wide breadth of experience. And we're going to be talking to you about what happened in the last 30 days in the Austin real estate market.
Never seen anything like it.
Except for the 30 days prior to that.
Correct.
All right, well, let's dive right in. So today we're going to talk about the stats. We're going to go over some new developments that have been announced here in Austin, continue to talk about the inbound tech migration, talk a little bit about some fake news. So Lee uncovered a story that had a shocking headline, and we're going to dive into the actual stats behind it. We'll start with the number of active listings. So Lee, if you want to go over...
Yeah, so over the past few months, we've been introducing the concept of taking a look at the monthly housing inventory based on different absorption rates. And so on the screen, you can see we have a 12-month average, a 3-month average, and the average number of homes sold over the past month. That number's been going down steadily. If we look at the average number of sales over the past year per month, it's been just over 1,000. Over the past 3 months, about 751. Yet over the past 30 days, closer to 637 sales per month. When I ran the numbers yesterday morning, there were 370 active listings of single-family homes in Austin. So this is Austin proper, single-family homes, only 370 active listings. Well, if you're selling 637 a month and you have 370 for sale, you've got a very low inventory, and that's really the bottom line. It's about a half a month, depending on how you slice up the numbers. You know, you gave a nice intro, and I do appreciate it every time that you talk about my background and all of that stuff. But I've never seen these type of monthly housing inventory figures. It's really shocking, and it's really something that we have to keep reporting on, and we're going to be parsing out some of the nuances per price segment as we get into the subsequent reports.
At a first glance, you look at this chart, the 12-month, the 3-month, and the 1-month, so it's slowly increasing. But I think, we're at such a low rate that it's really nominal. It's not having much of an impact, the fact that it is increasing. I think we'll continue to keep an eye on this. We hope that inventory slowly creeps up over time, but there's been no substantial changes, and we don't see anything on the horizon that's going to substantially change the inventory.
Yeah, and the interesting thing here, and we highlighted a new segment that we're doing today, the fake news. A lot of times fake news has to do with statistics and the analysis of statistics. And when you look at this, it is extremely misleading. It's not that the monthly housing inventory is indicating that the inventory is actually going up. It's that the number of sales per month is going down so dramatically that it inflates the outcome. And that's, sometimes opaque for people to interpret.
So let's talk about the number of sales. So down 3% from this time last year. So somewhat nominal. And again, this is not because people aren't out there trying to buy. It's because there's just not enough homes to buy.
Yeah, and we're using this 5-year array, if you will, as we get into some of the different statistics so that you can really look at the trends and where we're at. Last year at this time, 657 sales per month, and again, 637. Hey, that's up from January.
And then the average sale price up 9.5%.
Right, so here you can see that we were looking at $733,980 last year. We're up over $800,000. That's no surprise. And again, we're looking at average. We'll dig into the nuances between average and median, but we like to use the average number for a variety of reasons. It's just more reflective of what's actually happening in the marketplace. We'll talk about median values in a little while.
How long it's taken a property to sell? Up 35%, which seems shocking,
especially
in this market. But I guess it's only going from 20 to 27 days.
How can it possibly be? Last month we talked about it a little bit, maybe seasonality, maybe some of the volatility in the stock market, to a lesser degree the crypto market, more recently the war that's broken out since our last session here. But what we're thinking, and we're going to dig into it for next month, is that there's some unrealistic expectations on some sellers that are looking to profiteer. Therefore, their properties haven't sold, they're lingering on the market. kind of dragging down or dragging up, if you will, the number of days on the market. And I think that's got a lot to do with what's happening.
Yeah, and just anecdotally, an example of that is a unit that's currently available at the C Home. And if you look at units, the 2 bedrooms that are, a little bit bigger, so at least like 1,100, 1,200 square feet, up to 1,600 square feet, that are newer, this quality finish out, there's only one unit available. And so when there's only one, the seller can say,
right.
and their agent, yeah, let's just throw it up at
right.
1.5 and see what happens.
Right.
When you look at the comps, there's comparable units that sold in December in the million to 1.1 range.
Right.
And, you could argue what the pros and cons of each are, but,
right.
Even if price adjusted, that 1.1 is really 1.2, there's still a huge jump in just a couple months. And yes, prices have gone up in downtown condos since December,
right.
but more than we could really justify in a unit like that. But there's only one. So if a buyer comes around and he really or she really wants to live there, then they might just pay up because that's the only option. So time will tell on that. And we'll see how buyers react in these types of situations when sellers are just saying, oh, what the hell, I'll throw my unit up and see if people are willing to pay these crazy prices.
Yeah, and from the seller's perspective, David, I think that really being able to expertly analyze the numbers and give them some meaningful guidance on how much is too much, even in the current market, I think that's a big deal. We talk more about pricing methodology at another time, but these days on market going up, I think, is due to the profiteering of some sellers that have unrealistic expectations.
Number of new listings up 13.6%, so from 705 last year to 801 this year. So that's a good sign.
That's
We're
a
seeing
very
more
good
stuff
sign.
come online.
Very good sign.
Of course, not the huge jump, and I think people are waiting for this, all of a sudden 1,000 homes are going to hit the market in 1 month and prices are going to drop, and it's going to continue to be incremental like this if we do see a change. But there are a lot of buyers from our experience that are just kind of sitting on the sidelines waiting for the right property to come up, and some of them just came into the market in the last 30 days and they're going, okay, well, I haven't been looking that long,
right.
So I'm just going to wait. But another 60 days goes by and all of a sudden we're into May,
yeah.
and they haven't found something.
Right.
And if you take that and extrapolate it amongst tons of buyers across Austin, all of a sudden the market could heat up really fast in a couple months when people are like, okay, I've been looking, I haven't found it. This one for 1.5 million, maybe they end up buying it for 1.4 30 days, 60 days from now, which seems like it's still a high price, but
right.
It's the only thing available and people are ready to make a move and buy something.
Yeah, no, it's highly relative.
The inbound tech migration continues. So the big announcement, and what I keep coming back to is we keep getting these big announcements and thinking, well, that's it. That's going to be the last big announcement.
No.
But I think the key here is to know that these are just going to keep coming.
Right.
There's a lot of momentum in Austin.
Right.
You have more of these companies attracted to Austin, then more of the employees attracted. It's just cyclical. So the next big announcement is TikTok, 125,000 feet of office space. That's at 300 Colorado Street, which that building was completed in 2021 and has about 353,000 square feet total.
Yeah, no, it's interesting. I'm not sure if there is a single tech luminary that's not represented in the Austin market area.
Yeah, and if they're not, then they'll be here pretty soon, I'm sure.
I'm sure. Well, you may or may not have heard, it's obviously big news, the Tesla Gigafactory. It's been in the news for quite some time, but you may not have heard that Tesla's actually submitted filings for a second facility, which is referred to as Project Cathode, where they're reportedly going to be making materials for the batteries to power the electric vehicles. And so the idea is that this is a 32-acre project. The land that Tesla currently has is about 2,000 acres. So it's not necessarily a land purchase, it's more of a land usage, infill, density, people moving in, jobs, infrastructure. Just more of the same. The beat goes on.
So is this a 32-acre parcel that they're permitting of their 2,000 acres?
I believe so. So there's a lot of details on it. The key is that it's kind of the tip of the iceberg with the infrastructure, the reformulation of manufacturing and supply here domestically rather than dependency overseas, increasing or decreasing the logistical costs of moving products around and raw materials. It's very interesting macroeconomic stuff, but as it relates to Austin, as I said, the beat goes on. If we look at the map, we're going to start north Austin and work our way south. This is a $2 billion mixed-use project near the new Apple campus. So that whole strip along Palmer is out of control in terms of what's going to be going on there. It's hard for people to envision what's coming because it's so massive. This is a 156-acre project, 200,000 square foot of retail, restaurant, outdoor cultural space, 2 hotels, thousands of high-end homes, and 30 acres of parkland. So pretty massive development going on up there. And when you take a look at with the the soccer stadium, the metro rail, all these things coming together, that Cedar Park line going up that direction is really phenomenal area to place your real estate bet, if you will.
I think the thing though is like these announcements just keep coming all over the city. So
well, we're about to move our way south.
Okay.
So here we go. This one's near and dear to your heart, David. Why don't you lead us through this?
Sure.
one?
Yeah, this is the American Statesman site, which is just an amazing location in terms of it's right there on South Congress, views of downtown, and they're going to have 1,300 apartments or condos. It's a little bit flexible at this stage. It's just 1,300 residential units, 275 room hotel, and 1.65 million square feet of retail and office space. The light rail is going to go through the eastern portion of the property and head downtown, so there's going to be a stop there. This is just going to be a super cool project. It's not fully fleshed out yet exactly what it's going to look like. I've seen things where they've shown 5 different towers with below grade parking, but it's definitely going to activate that area. It's already a hop-in area with the Music Lane development just a little bit south there on South Congress. If you haven't been over there, I would recommend go for a walk. Almost any evening, definitely on the weekends. It is bumping. There's tons going on. Lots of people out. It really makes it Austin feel like this destination city with things like Music Lane and eventually this American Statesman site, which I don't know if they've come up with a new name for.
I haven't seen one. Now we're moving south. So now we're getting into suburbia, adding thousands of homes. And this is a 2,200 lot project. It's D.R. Horton. Basically, as I said, 2,200 single-family homes. It's over 1,000 acres of land. There'll be some apartments as well as duplexes in this area. And, this is the expansion of that urban core, the other path of development off of I-35 as we move south. Again, a great area to place your real estate bet if you're looking to invest in Austin. So this is an interesting project, over 775 acres being developed. There will be over 2,500 homes. There's going to be a lot of other types of use in here. One of the keys, though, that I find interesting, so we're trying to bring value by highlighting development, helping people understand where the path of development is for placing their bets, and also understanding the supply-demand dynamic. You would think that these projects are just thumbs up. The surrounding communities love the idea that these things are happening, bringing dollars and development into their community. But historically, that's not the case. People that have been in these particular areas for a long time often have resistance to the development for various reasons. This project is a case in point. So whether or not this project comes to fruition in the current scheme that they have developed or it gets pared down, the main thing is the impact on traffic in this particular location. It's not a well-developed infrastructure, and they don't want to overload the existing community with just a massive influx of people. So it's interesting as we look at the need for residential development versus the reality, the impact of that development. And this story is one we can get into the details more, but it's just kind of interesting that there are some limits, some carbureted sort of, you can carburate down the mix of the development relative to the community so that it's a good fit. And just massive development doesn't work in a lot of places. And this is kind of pointing that out. So it's growing pains, if you will.
So I guess before we dive into the next segment, maybe we just kind of summarize what this means for buyers and then for sellers.
Yeah.
So starting with sellers,
Yeah.
We've seen different strategies like, hey, let's price this $400,000 higher and let's just see if a buyer comes along. There's other strategies of pricing it to sell, which would mean pricing it right about where we think it's going to sell, maybe a little below.
Right.
There's different strategies depending on the seller's goals. There's other factors that they need to take into account. And I think in a market like this, people tend to think, well, I mean, everything's selling,
Right.
So I don't even need an agent. I'm just
Right.
going to throw it up
Right.
and it's going to sell.
Right.
And that's accurate. Unless you price it some crazy high number, it's going to sell.
Right.
The bottom line, though, is it going to sell for the top dollar that it potentially could? And that's where having a strategic partner that can help guide through this decision of how to price it, making sure it's staged properly, photos are done correctly, all these other things. And, there's other avenues depending on somebody's goals. Do they off market first?
Right.
Anything else you want to touch on for sellers as they're going about making their decision on whether to sell, how they go about it?
The main thing I would say is that, anytime something seems too easy or too good to be true, it usually is the case. It's just, there's more to maximizing the gain on the sale of your home than simply putting a sign in the yard and hoping for the best. More than just simply putting out an unrealistic number and expecting some fool to come by and pay it. Rapidly changing markets demand expertise, and if you're looking to maximize your gain, you're much better off actually going through the analysis to make sure you're going to get top dollar than hoping and wishing. It's too much money on the line for guesswork.
What we've seen over and over again is that the fee that a seller is generally trying to save by not using an agent is easily made up when the right strategy is put in place and able to achieve top dollar. We've had example after example of this where we've, at Public Lofts, we have the highest sale ever, now going on almost 2 years. We've got on the east side one of the highest sales ever, over $1,000 a square foot.
Right.
And then other examples of that where you're able to put the right strategies in place and just blow the doors off and get top dollar, and in those cases make back the fee that we were paid for our client.
Oh, absolutely. And one thing I'll add, David, is it's not just the price that's agreed upon, it's the seller's net, and I mentioned that before. A big deal is being properly situated for the option period, negotiating from strength, minimizing the buyer's opportunity to nickel and dime you once you've reached an agreement. There's a lot to that, so we'll talk more about that.
Okay, and then for buyers, so, I think I said this 2 months ago, was they need to be patient and aggressive. And it seems like those are kind of opposite. So the way that, what I mean by that is there's not a lot out there. And the other third thing might be setting their expectations lower, recalibrating what they're going to get in a home or a condo, knowing that look, maybe I want all these things, but that's just not going to happen.
Right.
I need to maybe make some sacrifices on some of those things pretty early, make that decision, because it can be a unforgiving market out there for buyers. It's emotionally draining. And so from the start saying, okay, I know that that's how it is. It's a really tough market.
Yeah.
I need to just quickly know what I'm willing to sacrifice, because it's not a difference of, in previous years, it might have been a difference between sacrificing and just getting something a little bit less. Now you're going to make those sacrifices so you can get something at all. Mm-hmm. Because what we don't want to happen is somebody gets so frustrated, over the course of the next 3 months while they're looking and trying, they get frustrated, they decide to just bow out from the market, and they don't end up buying in the next year or two, which could be a huge financial setback for somebody that's early in their career trying to build wealth. And this is one of the best ways to do that we've seen over the last 100 years is by owning real estate. And so being able to get in the market in some form, especially what we're predicting here is that prices are going to continue to appreciate. Yeah. We're still actively buying and making moves to acquire stuff, even though prices are at all-time highs. Mm-hmm. Setting those expectations properly, being patient, so waiting for a property that could work, hit the market, and then when it does, being really aggressive about making moves on that, which means we get in to see it quickly, we make an offer quickly, we're aggressive with the offer terms, which we can talk about all the things that we're doing to get people under contract. And a couple of the people that are under contract right now are off-market deals that very few people had access to. And so taking those channels as well.
Yeah, it's interesting with buyers, especially first-time buyers, David, in the current market.
Yeah.
Folks that haven't gone through this process before, and having the right expectations, being patient, and really being honest with the process and knowing what your top dollar is, what you're willing to pay. So we do our very best to set the right expectations for our clients and win. And there's a lot of elements to it. We help each client specifically with their own situation.
All right, so let's dive into fake news.
Oh my gosh. Why don't you talk about, you found this article, you brought it to me, and let's just discuss it a little bit.
So this article that said, Austin condos appreciating faster than single family homes. I thought, oh wow, I mean that anecdotally, what I've seen, that lines up, because we saw downtown condos, we were in a multiple offer situation for a condo at $1.6 million at the end of the year. and the seller decided to pull it from the market.
Mm-hmm.
And then he relisted it, and it ended up selling for 1.8 in January. Now, 1.6 was where the comps were, maybe even 1.55, but we felt comfortable paying for it. It fit the client's needs, even though 1.6 felt like a little over. So to see that rapid jump in appreciation, and if he hadn't pulled it, we probably would have bought it for 1.6. But the market, there was just so many more buyers looking in January than there were at the end of December. So that and a couple other things deals like that I had seen, I felt like, I mean, this is spot on.
So
right?
David sends me the article, "Hey Lee, this is great. It backs up exactly what we were saying. Condos are going up faster than houses." Okay, great. Let's dig into it.
Austin, which recently made headlines for quickly becoming the most expensive housing market outside of California, which I don't know where they're coming up with that, because obviously New York City is more expensive than Austin.
It's questionable.
So, yeah, I'm not really sure where they're coming up with that.
Right.
Has seen the median value of a condo rise from $353,000 in December 2020 to $450,000 in December 2021, a 28% increase. By comparison, the median value of a single-family home in the same period went from $510,000 to $599,000, a 17% increase.
Sounds impressive. Sounds like case closed. In the court of law, that would be de facto evidence. Just take it at face value, right? Let's break it down. So go ahead and show the spreadsheet, and we're not going to get too technical here, but we're going to open up this Excel and just kind of show you a few things. So when you are looking at data and you're trying to get the truth and the facts, there's usually more to it than meets the eye. So what we're going to do is we're going to look at the charts on the left, and you can see the highlighted numbers. So why don't you show the cursor at the 520 and the 599. That's
510 and 599.
510 and 599.
Yep.
That's the single family homes year over year. The chart below, you can show those highlighted numbers are the condos, 353 to 453. It's a bigger jump from a smaller number, a greater percentage. Based on that, oh my gosh, condos are going up faster, David. But take a look at the next chart. So we go to the right, and now we're looking at the changes. So if we scroll up, you can see in column L, for example, the year-over-year jump for single family from year 1 to year 2, and the same for the condos down below. And when you look, again, at the highlighted cells that are down there, it's backing up exactly what the article said.
So the 28% for condos, 17% for single
yeah.
family.
Hey, so far so good. That article looks like it's correct. Well, let's take a look at what happened the rest of the year. So just looking at column O, just anecdotally compare the houses to the condos.
So like going from January all the way down.
Yeah.
So these percentages, 26, 33, 33, 41,
Yeah.
47,
Now take
43,
a look at the condos.
13, 23, 14, 28, 19.
Seems a little bit less, right? Okay, now let's go to the right, all the way to the far chart.
Yep.
And this is showing the differential. If the numbers are positive, that means that the single family homes went up more. If it's a negative, that means the condos went up more. So let's take a look at how that breaks down and what are you finding?
Yeah, so you're saying single family homes outperformed condos every month.
Right.
They're except for two, where they're break even in October.
Right.
And then condos outperformed in November.
Right.
Oh, and December. So 9 months, single family outperformed. 10th month, they're even. And then 2 months, condos outperformed.
Correct. So what we're looking at is month over month specific data, taking things out of context. So I'm not a fake news expert, but as we take a look, whether it's politics or whatever the heck it is and there's news, are we taking things out of context or not? That's the key to fake news. Let's go to the next tab, and we won't go too far down the rabbit hole, but we're going to check this out. Data analysis is often best with big data. The smaller the data set, the easier to take it out of context. These numbers reflect the median price of the year, not the month. And so you can see side by side, why don't you break it down a little bit?
Okay, so single family was up almost 9% in 2013 versus condos up 10.7%.
They were outperforming back then.
Yeah. 2014 as well, and then 2015 single family outperforms, back to condos, back to single family,
Right.
back to wow, we're ping ponging back
Yeah.
and forth here.
Right.
Can condos, single family, obviously huge winner in 2020 for
Right.
obvious reasons.
Right.
People wanting more space.
Right.
We talked about that 1 or 2 months ago. I showed the inventory for condos, and it just went crazy high. There's tons of condo inventory in 2020 and early 2021.
Right.
And then still in 2021, single family barely outperforms condos.
Yes. So, what's the bottom line? Bottom line is, if you are investing your hard-earned dollars on real estate in Austin, don't do it based on the news. Talk to us. We're going to go through the numbers. We're going to go through the details. I'm not even going to ask David to show you the other tabs that get way too granular on exactly what we're talking about. So anyway, we just thought it was fun. Debunking fake news, especially as it relates to real estate, I think is something that we can add value to for our community.
Thank you for joining us for the market update. One other thing I will add is that the Modern Residences, it's a 310 unit condo building, is going up for sale. You need to have a reservation. So if it's something that interests you, I would highly recommend reaching out to us. Reservation or appointments for contract are starting this upcoming week, so the second week of March. And they have currently 310 units, over 600 reservations, which means people that have submitted a letter of pre-approval from a lender showing that they qualify for the size unit that they're interested in. Now, you might say, well, shit, I got no chance. There's already 600 reservations for 310 units. Now, a big chunk of those people are not going to get the unit they wanted, or the pricing maybe wasn't what they were expecting, a little bit higher. I think the key with a property like this, I used to be a little bit hesitant on the downtown condos. I think for most people, they see all these buildings going up and they just feel like downtown is just growing so fast, prices are gonna come down. After this year, this is the only project that has been announced and will deliver units in the next 3 years.
Wow.
So that's 310 units in 3 years. So 103 units are gonna be added to our downtown condo inventory a year for the next 3 years on average. I mean, to me, that seems like a crazy low number with everything that's going on.
Definitely.
And I think there's this frame of reference issue that people have. They see a unit downtown. They say, oh, that condo, it's $1 million. Okay, I can see it being worth $1.5 million in a couple of years. Like, I'm willing to pay $1 million for it and knowing it's going to be worth 1.5. Now, if I told them it was 1.3 and it's going to be worth 2, they're like, no way. There's no way that condo is going to be ever worth $2 million one day. And it's really an underestimation of how compound interest works. And a story that I have is, there's condos or co-ops in New York City that today are $1 million. What do you think the person paid for those 40 years ago? I have a personal example. $50,000. $50,000. Do you think that person, when they bought it for $50,000, thought, man, one day this is going to be worth $100,000. I'm going to be so excited. If you had said to them it's going to be worth $200,000 one day, they would have thought, you're out of your freaking mind. This thing is never going to 4x. And here, it's 20x.
Wow. And
so I think that, I'm not saying that real estate in Austin is going to 20x in the next 40 years. I mean, I don't know.
It might.
It might. But I think setting a frame of reference that, it's $1 million unit, it's never going to be worth $2 million is really short-sighted.
It's just the human experience to operate from our own perspective. And what we're trying to do as it relates to real estate analysis is offering a broader and deeper perspective on what it not only is, but what it could be. And so it's a point well taken, David. Understanding the market, there's a lot of variables taken into account.
Yeah. And the other things I look at when I'm looking at a condo like this is how are the price per square foot comparing to our comps in other cities? So the San Francisco's, New York, San Jose's. So if they're selling at $2,000 a square foot or higher, and these are selling at $1,200 a square foot, we're not there yet.
Right.
Now, if we were the same as San Francisco, then that would be maybe a little bit of room for concern. We'd have a whole nother macro discussion to look at to say, is Austin now offering more than San Francisco has to offer that people are willing to pay a premium to be here? The other cool thing about these projects that are pre-sale or new construction, and this isn't the only one, there's a couple others that we're eyeing that are coming available, not downtown, but outside of downtown. So if that's something that interests you, is that you only have to put 5 or 10% down. Mm-hmm. Modern is 10% down. Mm-hmm. And so it's 5% now, 5% in 6 months. It's not going to be completed for 3 years.
Wow.
So you lock up 10% for 3 years. And the way the numbers work on this is, let's just say you buy $1 million unit. It's $100,000 down. If in the next 3 years prices appreciate an average of 10%, like they have been, mm-hmm. that means you're gaining $100,000, $200,000, $300,000 in equity on a $100,000 investment. Mm-hmm. So you're tripling your money in 3 years.
That's what we call leverage.
Yes, and you don't even have to go get a loan. You got to get pre-approved, but you don't actually have to get the loan.
Right.
So the benefit there is it's not showing up on your debt to income ratios. You know, you can figure out how to finance it in 3 years. Hopefully you feel confident that you'll be able to, but that's another thing to take into account.
Yeah, any of these projects that we've discussed today, they offer an array of opportunities, and we like to discuss these things with our clients. We do it all day long and sometimes 7 days a week. So let us know if there's anything here that is of interest to you. We'd love to chat about it.
Thank you for joining us for this month's market update. Please like the video if you got something out of it. Share it with a friend. Subscribe to the channel so you get updated right away when we post these next month. And don't hesitate to reach out if you have any real estate questions.
Thanks, everybody.